I saw some electrifying thoughts, being shared in this EV ecosystem. So let's start with some electrifying introductions. So let me start with the women first. So Divya, would you like to go first?
Um, I'm. I will, but um, okay. I will do that, Abhishek, but I'm going to request that this be the last ladies first kind of question.
Sure.
All right. So I'm probably also the one among the oldest members on the panel, so seniority first. So a little bit about me. I spent most of my career as a non-VC. I come from the technology and consulting background. I spent most of my career building businesses inside other large businesses and scaling them up. And my career got jump-started during the whole dot-com boom and bust period. I was part of the team that worked. So I started off my career with SIFI, more or less. So I was part of the team that took us to NASDAQ twice back in the day. We saw the dot-com boom and bust. I was in Europe setting up Cognizant's infrastructure practice when the whole 2008 financial crisis happened. So that crisis and the recovery. I was with Microsoft initially in India, and then I used to run their Asia Pacific and Japan wide consulting practice and worked for ServiceNow. So I've been on the business side of things. As an investor, I've been an angel and an LP in various VC funds for close to 15 years now, and now sponsor and partner at All Funds. All Funds is I would venture to say, India's only gender-sensitive climate fund. And very pleased to announce that we have recently received the distinction of being India's first and only fund to receive funding from CGEF, which is the Climate Change Equity Fund, run by 2X Social. Again, very, very pleased to be on this panel. Thank you so much for having me over, folks, and looking forward to hearing the insights from the rest of the panelists and also interacting with all of you over the event. Thanks.
Oh, thank you so much. Very impressive. Neha, over to you. Thanks.
Hello everyone. So since I am the last entrant in the panel, so I'm sure nobody is aware about my profile. So I'm a CS and a lawyer. I started my journey as a hardcore litigation person. So have been to civil courts, high courts, NCLT, insolvency, bankruptcy. Turned into VC. So I represent Agility Ventures, which is a Cat 1 angel fund, and we invest in early stage startups. We are sector agnostic. And we support startups at seed and pre-Series A kind of stage with mentorship, hand-holding, business opportunities, portfolio collaborations, and help them to have the follow-on fundraising as well. So that's the kind of support we provide. Happy to interact with all of you, and looking forward to hear from the great panelists here. I'm assuming, I think she's the senior one and I'm probably the youngest one. So that's the kind of ladies you have in the panel, Abhishek.
Well, thank you so much and congratulations to you. So Neha was just promoted to the CEO of Agility Ventures. Yeah, so great. So let's start from Sahil now. Sahil, over to you.
So good morning everyone. Thanks Nitien for inviting me over here and having this session over here. So I'm Sahil Makkar and I'm Chairman and CEO of Punjab Angels Network. Though by profession I am a chartered accountant and also a alumnus of Indian School of Business. So I practiced for 10 years, so Punjab ecosystem is sometimes above Delhi NCR, I would say, and it's regarded as the eco startup because it's not so growing. Earlier when I shifted, now it's growing heavily, but 3 years ago, I'm talking about 3 years ago. So at that time, there was a thing like there were very less incubators, very less things, and last 3 years I've seen drastic change. But that time I thought, okay, so people were saying after doing ISB, you should shift to Bangalore, Mumbai, where the ecosystem thrives and all. But then I thought, no, let's create that ecosystem here. So then I left my practice because I thought, कि अगर कुछ करना है तो you have to be in it full time. So I left my practice full time and then came into this and trying to get the right kind of ecosystem over here. As a funding, obviously we do funding, but we have international partners also based out of Australia, Singapore, Dubai, US, Canada. So being Punjabi, so my target is getting that Punjab fund. Punjab is sitting over there, funding into Punjab also. And maybe Punjab-based startups or maybe not based, but getting that investors over there.
Punjabi होने का biasness create कर रहे हो.
So वो उसी से create कर रहा. So that's why I'm trying to do that. Though अभी वो stage पे नहीं पहुंचे अभी थोड़े, but अभी तो trying to get that ecosystem. But yes, the 3 years ago I started, there was no incubator, so I was at the base level. But like other incubators have come up, so I've left that thing and come more into funding side. पहले कुछ और करना पड़ता था, पहले सिखाना पड़ता था basics, but our basics there are multiple organizations who are helping out. So that's why ecosystem is thriving a lot. है ना, तो above Delhi NCR also, but trying to create that funds also, क्योंकि अभी पूरा Delhi NCR से ऊपर जाओ तो not even a single fund in Punjab, Haryana, Himachal, JNK, Chandigarh. So trying to create that fund soon, possibly over here.
Oh, that's great. Thank you so much, Nitien.
Hi everyone, good morning. First of all, let me congratulate Nitien for putting this great event together. I think it's a great outcome from this event everyone would be expecting. Great turnaround. Okay, so as far as myself is concerned, I'm Nitien Garg. I'm part of the Advantedge team. Advantedge is an early stage VC fund. We are mobility centric early stage investors. Generally, we would like to come in at a pre-seed or seed stage, and anything which is really around mobility. And when I say mobility, is a very, very wide theme for us. Anything that has to really look at moving people and goods around, and whatever could be an underlying business which is enabling this movement is something that we look at. Currently, the focus for the third fund that we are currently raising. So we are in our third fund right now. The first fund was started in 2016. We deployed that successfully. We have already started exiting that fund. In 2020, we started the second fund. Some of the portfolio companies where we have invested are companies like Rapido, Chalo, Shuttle, Zingbus, Exponent, Moonrider, and a few others. Currently, we are in the process of raising our third fund. We are raising $80 million. We have a good line of sight in terms of doing the first close sometime in March and April this year. And then all the newer investments, we will start investing from the third fund. As I said, this is a mobility-centric fund. So anything that has to do with mobility and electrification. Some of the other sectors that we look at closely, which are kind of more strategic to the entire mobility evolution, is energy and logistics. So anyone who's really building something around these sectors and these theses and themes, happy to really speak to them. Thank you.
Oh, great. Very, very interesting. Thank you. Karan.
Thank you, and thank you, Nitien, for having all of us here. It's wonderful. So I've been on the investing side for about 20 years. That's pretty much all that I've done. Invested across infrastructure assets, invested across renewable energy assets, then invested across impact assets. After that, I was investing globally for a venture fund across consumer tech assets. Built about 3 unicorns from that fund, multiple exits, 20x exits and 10x exits as well. Did everything from SaaS to, let's say, mobility. After that, set up my own fund along with my partner Charles called EV2 Ventures. Again, this was one of India's first mobility fund on the B2B space, investing across electric vehicles, logistics, supply chain. We named it as a smart mobility fund, which is fully deployed. Our portfolio includes companies such as Euler Motors, EVs, Alt Mobility, Swap Design, Symmetricals, N-Mobile, Roche AI, Centrity, Fambo. So we did everything from agri supply chain to warehousing tech, finance, aftermarkets, so the entire works, and basically the entire value chain. Just to give you a little background, little color, we have 100% hit rate on our fund. We have 0 write-offs in the last 5 years. Having said that, now we're on Fund 2. We've done our first close on Fund 2 in October. We joined hands with Supply Chain Labs, which is another logistics fund, and we renamed ourselves all to Caret Capital. And Caret is closed now. Basically we've done a first close, and we're looking at, and we've expanded the thesis to do mobility, distribution, and employment. The question mark mostly that everybody asks me is why employment? Why do we look at employment? Logistics sector is one of the highest employer across, the entire country. And it's really important that we have skilled workforce. So whatever we can do to, plug that loophole or that gap really helps. Again, the thesis is going to evolve deeper into the existing sectors. We've obviously done adoption in Fund 1. Now we're looking at doing more technology plays across the component spaces, etc. And distribution, we would like to see everything that, from warehousing to fulfillment, dark stores. And I remember the previous panelists telling us that there's a huge cold chain storage shortage across the country. Yes, something that is very relevant for us. So that's what we've done. We have made our first investment, but we haven't announced as yet, so I'm still not announcing it.
This is a good platform to do that.
To give you background, our LPs include Bajaj Auto, Michael and Susan Dell Foundation, Transport Corporation of India, few international, let's say, automotive players as well. Largest automotive supplier, JRG Automotive. We also have CTO of Gentherm, as well as CTO of Stellantis. So we have access to the international automotive market as well as the Indian automotive market. That's a big advantage that we bring to the table when we're investing. And we don't invest in anything that we cannot add value in.
That's a great point. Thank you. Thanks.
Sorry, and I missed, we do pre-series A stage, about $500,000 to $1.5 million to $2 million. We'll go all the way up to $2 million if required. And we can start at a 500K check. We want companies that have, established proof of concept, have certain revenues on the table, and can withstand our valuation ranges, basically.
This was a mic drop moment.
Yeah, absolutely. No, I think a lot of interesting things you said and a lot of questions to follow. But Vineet, please.
Thank you so much, Nitien. Thank you so much for the invitation. My name is Vineet Khurana. I've met some of you earlier and some new people that I got to meet yesterday as well. So I'm here representing two organizations. Chandigarh Angels Network, one of the babies that I nurtured for a couple of years, investing in several themes, right? Seen some good success stories over the last couple of years. But I'm filling in for Nitika because she's now building Chandigarh Angels Network, taking it to the next level. So we've invested in themes like F&B, artificial intelligence, multiple vertical use cases. We've invested in supply chain, logistics, so on and so forth. And EV, I'm yet to take the first bet into, and which is what Nitien is helping me with. I'm very confident that after this conference, we would have some of you to be evaluated further, and maybe we end up writing the first check to an EV company. As of now, nurturing SACC, Startup Accelerator Chamber of Commerce, as a CEO and Executive Director, where we do multiple interventions in the startup ecosystem. So one is the 0 to 1 approach, which is done through our incubators spread across northern India. Multiple of these incubators facilitate last mile entrepreneurship, which means giving access to people without resources, the access to the resources that they need to start their entrepreneurial journeys. Then the 1 to 10 approach, which is facilitated by acceleration. So we pick multiple thematic areas, pretty much vertical, education, livelihood, healthcare, mobility, some of these areas, that we've been building our programs in. And there we take a pretty much integrated approach with the corporates, right? So the corporates that are working in that specific industry, we go to them, we ask them about their problem statements, then we go to the startups, we curate startups, help them with several resources, capacity building. And the bottom line objective there is to help them build their go-to-market strategies and marry with the corporates, so they get a bigger, better platform to be able to deploy the solutions and the products and be able to reach to the masses. The third part is obviously investing, right? So in my personal capacity as an angel investor, it's been a couple of years that I've been personally deploying my money. Technology is the core area that I take. Software technology has been one of the core areas. But at the same time, I'm now diversifying more into life sciences and emerging tech. EV, as I said earlier, yet to begin, but I'm very keenly exploring it for last many years, 6-7 years. yet to take a bet as a consumer as well. I mean, because of the apprehensions that we see around the infrastructure which is out there. So the last two cars I accept that I've taken ICE cars rather than opting for electric vehicles, but I'd love to take one soon, right? So because of the evolution which is happening in our country, thankfully. So yeah, over to you.
Oh, thank you so much. Really impressive profiles. Quickly, in the interest of time, I'll keep my introduction very short, and detailed introductions can follow up in the networking meet. I'm Abhishek Chauhan. I'm the founding partner for a boutique investment bank and consulting firm called Samvedanam. We are based out of 3 cities right now and are just going international as well. And essentially, we focus on climate tech, with EV being one of the focus areas. And on EV, we are working with Nitien very, very closely. So thanks for onboarding us. So guys, there is a very good request from the panel here to keep it fairly interactive. So after every second question that I ask from the panel, the third question has to come from you. Yeah. So please make sure that you ask them questions, grill them, because I know that there are a lot of questions in the room, right? A lot of you have tried to raise money in the past, and you have also, a lot of experiences, relevant experiences to share with us. So great. So let's start with the first question. I could hear from most of the group here that some of you have already taken bets in the EV space. Some of you are closely watching the space to take your next bet. But what is the level of excitement that you see, from an investment perspective, specifically from your perspective or from your LP's perspective, right? When it comes to EV investments, right, in the entire mobility ecosystem. So shall we start with you, Sahil? Yeah.
Yeah, so I think EV is a space like right now everyone wants to come in, but because of the cost, price and all, like Vineet was saying, and I think I have the same perception. If you go and buy a car, so there's lack of infrastructure right now, and the another thing is it costs much more higher than that. But as a mentality of an Indian, so when diesel cars came in, so why people bought those diesel cars? Because of their daily expenditure, not because of the cost. So I think EVs can actually revolutionize, and I can see many startups coming up with a solution. Like it will cost you same, whether you are going for buying it or whether it's a time to refill or maybe electricity, as a EV charging. So I think it's changing, and many investors are coming in who's bringing that solution, who's bringing the solution of that same maybe matching, like in comparison to other vehicles. If the investment, if they can reduce to the same cost, same price, and build up the infrastructure at like I think there's one startup who I've interacted here, who's mobile charging vehicle. No? So that's good, because that's the lack. People have a fear that if my car is in the middle of a road, how it will get charged. So that's the point. That's why people are not buying it. But things are developing, and investor comes in for the new technologies, innovations and all. And EV is a better space to invest in for.
Super. Nitien, you shared some very interesting thoughts yesterday.
Yes. So see, if you look at why EV is required, and I'll take a very, very macro view. If you look at India, I'll say 10 of the top 15 polluted cities are in India. You take another view, look at the import bill for India. India imports $150 billion of oil every year, right? So there's a great need for us to electrify the fleet. And with rupee depreciating, this import bill is really hurting us more and more. So in order to really take up some of these challenges, I think EVs are really required to be mainstream in India. At the same time, what we also need to look at is we really can't paint the entire town with the same brush, right? People talk about passenger use cases. Sahil also talked about why there is a little bit of hesitation for the people to buy electric vehicles. But one has to really look at passenger use cases and commercial use cases very, very differently. This is the time when you should really try to tap into the commercial use cases, because with 10% of the car park, these vehicles consume 70% of the energy in India. So that is something which needs to be electrified in the first. And those are the kind of use cases that we are currently going after. So of course, EV is required to be done. You will also see more and more adoption on the passenger use case. But as investors, we really see there's a large opportunity for us to look at B2B use cases, to look at commercial use cases, where there are great businesses that are getting built.
Thanks. Okay.
I'll pick up where, great thoughts from both Sahil and Nitien. I'll pick up where Nitien left off, which is to really talk about at a macro level the ecosystem. The previous panel had some great insights. I'm going to pick on something that Gurcharan said. Obviously you earlier started working with Ather Energy at a very early stage. People think that EV investment is all about those big ticket, the next Tesla, the next Ather, etc. But there is a whole ecosystem out there which contributes to the success of this entire industry, the entire market. What we are seeing a lot of excitement around, and we are an early stage fund, we make, we're catalyzing, our ticket sizes, our first check ticket sizes are range between 2 to 5 crores. We can go up to 20 crores with follow-on investments, but those are relatively small investments for a capex intensive industry. So we really need to look at areas where Karan made the point about adding value, right, to the investment. If you have to add value, you have to invest in innovation, in point solutions. Because a 20 crore check is not going to make a big difference to the next Ather or to the next Tesla. So what are we looking at? I'll point out a few things and I'm kind of keen to hear from everybody else. So if you really look at cost of operation and cost of owning electric infrastructure, and I'll, both there's private mobility and there's public mobility. But let's look at private mobility, right? Cost of owning and cost of operating, the key factor that differentiates that makes EV cheaper for an individual like you or me to run an electric vehicle is cost of electricity, right? Then there are considerations, design considerations like range. If you're driving outside the city a lot, you're not going to make an easy choice to buy an EV. Vineet was making the point that he hasn't made that choice because possibly you do a lot of long drives. So if you have anything over 350 kilometers, you're worried about, is there charging infrastructure to get me there, right? So charging infrastructure, fast charging innovation, on two-wheelers and three-wheelers, a lot of interesting innovation around swappable batteries, alternative battery chemistry. Going back to what Gurcharan said about, reminding us about reclamation. We're already looking at a couple of interesting innovations in terms of reclaiming material, and particularly in terms of the heavy metals that are in batteries, right? So there are lots of, there's some interesting innovations coming up around design. So for example, India Making for the World, EV technology is very, very software and tech driven. So there are some very interesting innovations coming up on the software and tech side, supporting EV as well. So it's not just about the big vehicle companies or the big, the basically a Tesla or an Ather are putting together pieces of technology from multiple places. It's not all engineered in one place. So it is important for us to look at investing in those pieces that make up the ecosystem as well. And that's where we see a lot of excitement. I'll stop there because I'm very keen to hear from everybody else, but I really think the ecosystem investment, we're just getting started. And there's a lot of room for design, there's a lot of room for investment, there's a lot of room for innovation and returns. So.
Oh, that's very insightful. Thank you, Neha.
So I think as far as this ecosystem is concerned, overall for EV ecosystem, we all are very excited because we see there is a lot of potential, right? Most of the points they already have covered. So I'll take the very basic thing. We usually say manufacturing industry, D2C sector, but with EV and with startup, we use the word ecosystem. Can somebody tell me why we use ecosystem? Because we want to keep it interactive. I'm just trying to fetch some answers.
Anybody?
Because it's still in the nascent stage, it's still forming.
So what is an ecosystem? Generally ecosystem.
End to end, it is same like you have a service provider for mobile and mobile manufacturer. One cannot function without the other, but they are not in the same industry.
Correct. So ecosystem words come from nature itself.
Forest.
Earth is it. We used to study this in 3rd and 4th standard. That what is environmental ecosystem. Because the dependency is so high that if one pillar is not functioning properly, other pillars cannot.
Correct.
And that's why EV is also an ecosystem. So the dependency of this ecosystem is so high that, and we have reached to a stage where we are the third, world's third largest ecosystem, startup ecosystem in the world. But we are yet to come on the top 5, top 10 of EV ecosystem in the world. Because we are a developing country. And we have a lot of potential, we have a lot of talent, we have a lot of innovation going on. And yesterday I was in a panel and we were discussing about deep tech investing, right? In EV also we see that a lot of deep tech is happening. And deep tech needs a lot of patient capital. So I think industry, policy makers, and startups. All three have to come together to build this ecosystem in such a way that we can survive. So that's the potential India holds, that we are at third, startup ecosystem world. We probably will be very soon first startup ecosystem, and we probably will be in top 5 and top 10 of EV ecosystem as well. And that keeps us, come on these conferences, meet new people, meet new founders, see to their innovations and see how innovative they can think. We as investors, honestly speaking, if somebody tells me that, I have to execute one EV startup, I probably won't be able to. And that's what we learn from these founders. And thanks, Nitien. This is the energy we need for the room. Thank you so much.
Great, thanks. I think what you did was you sabotage all my other questions. Yeah, great. So, Karan.
Your fault. You already
I
gave
briefed
them out
everyone.
beforehand and then you said don't sabotage. So I'm going to break up this answer that he asked, why investments actually make sense in 3 parts. One is for the investors, which is the VC funds. Second is for your LPs. And third is obviously the macro. I think macros have already been covered, so 1 point that less for me. For investors, why does this, why is the EV sector, let's say the mobility sector per se, and I'm going to sabotage one more of your question. EV is a subset of mobility. But why does it really make sense for an early stage investor to actually come into the space? What we've really understood is that there's a lot of innovation. This is product level innovation. This is not, let's say, software only level innovation. So there's a lot of innovation that is taking place, and VCs inherently want back innovation, which can change the trajectory of the future of any certain kind of industry segment, etc. That's the role of a VC fund, ideally to back innovation. The dot-com boom was all about it. Every investment, SaaS investments, etc. Today, all your AI investments are about that. It's actually about backing innovation. Now, but a VC at the end obviously needs to give return to their investors, so that innovation needs to be backed by numbers, or let's say revenues, returns, to see where you will what kind of returns can be achieved. If the product really does well, we'll achieve superior returns, etc. So EV inherently is economically beneficial in the Indian context and commercial applications. So by virtue of it being inherently economically beneficial, from shifting from ICE to EV just makes absolute sense to back this sector. Now, what parts of the sector? Obviously, I'll let him ask more questions later and then come to that. But there are multiple parts of the sector that can be backed, and some parts of the sector that's, let's say, a VC fund cannot back, but maybe a private equity fund can back, or let's say strategics can back. So all pieces, or maybe the government can back. So it just depends, all those pieces put together. The second part is what are LPs looking at in the space now? There are multiple LPs, and we've spoken to pretty much most of the investors globally, and they all have different thought processes of how they want to approach the sector. Family offices are mostly looking for returns. They park 2 to 5% in their wealth in the space, on let's say in the VC space, and they're mostly looking for returns. Their first and foremost go-to, and I don't think anybody over here is raising capital, but just additional information. First and foremost is to preserve wealth. This is like their lowest form of, allocated capital. For strategics, or let's say CVCs, for them, they're looking for innovation. They don't mind giving you capital only if you're able to give them access to innovation. So their thought process is absolutely clear. They don't care about the returns. Returns is a byproduct, so they want innovation. If you have if you're able to give them innovation, it just makes sense for them. Whatever kind that will complement their existing business lines. So those are two key kinds of LPs. Obviously, and DFIs have government mandates to invest in clean energy, etc., and therefore the sector gets eyeballs. That's that for me.
Thanks, Karan.
So Karan was the one to say we'll keep the answer short because our panel बहुत बड़ा है. He's taking the most time. Is there anything left for me to answer? But just to answer your original question, and maybe because there is nothing more that I can add to it. But what am I looking at, or what are the LPs looking at? is the following. So we are seeing a great paradigm shift in the last mile logistics sector by EVs coming into it. So that is one thing that we are very keenly looking at. We are looking at battery management systems. We are looking at the software side of things. So I really loved what Sloki does, right? And that's where they are, apparently bringing that software innovation into the industry. And while everybody is fishing, they're selling the net, right? That's what I love about them. And I hope every one of you looks at them, and we may end up co-investing in that venture. So yeah, a bunch of these things is what I'm personally interested in, and personal mobility, right, or passenger vehicles as we call them. I think it's overcrowded at the moment, but anyone who does innovative component manufacturing, doing some radical innovations and making some components, which can disrupt the industry or bring some more efficiency to the industry. Some of the startups here are solving that. So very keenly looking into that as well. The only problem or the caveat here is by virtue of the fact that we are early stage investors. Seed to pre-series A is the prime focus. We are valuation sensitive. But the valuations in this sector are actually going south, if I may say. Right, which is where, and hence, that taking that first bet has been a challenge so far. Not that we haven't been keen in investing, but as Karan said, you want to preserve the wealth, you want to generate wealth for your LPs, for your investors. Hence, you always want to enter at a decent or a good entry point, right? You want to take an entry at a valuation that makes good sense to you. Hence, I feel Nitien is going to play a pivotal role here, being my negotiator at least, helping me, get a good deal. Thank you.
No, that's very smart as well. All right, I think very, very interesting answers, but probably we'll keep a rapid fire, right? So I just want
That makes sense.
top 3 bets within EV. I think Vineet did answer it, so I'll excuse Vineet from that answer. But let's start with the other way around. So Karan, top 3 bets within EV that you're looking at right now. You also answered it rapid fire, just 3.
Yeah. So battery recycling, battery technology, powertrain, basically components, whichever pieces, right? So that's what we're looking at.
Awesome. Neha.
I think again, recycling is one. And second is the component part, because for any manufacturer, strength lies in the cost of a component. And third is great execution capabilities. That's what is very important.
Okay.
I'll reiterate the battery recycling part because that's important. I would actually say there's also interesting things happening around fast charging infrastructure innovation. So that's very interesting as well. And alternative battery chemistries is something that I would actually add to the pot. So.
Re-emphasizing battery recycling, of course, is area of interest. Battery warranty, and anything which has to really do around EV insurance, specialized EV insurance play is that we are looking at.
That's very interesting. Yeah.
So maybe anything which is having a cost efficiency in any terms, because that's the which I talked about. Gives it brings cost parallel to the other vehicles and all. So that would be the area of interest where, and obviously execution also. That's how they are saying, because sometimes I see startup comes in with the imaginary thoughts. Okay, I'll do this 1/10, but when I go for numbers and see that it can't be that 1/10, because there are certain factors which has not been considered. Maybe if you say so, I want to say 2 minutes for valuation. That why?
So I'll give you a question for that. Just hold your thoughts. Yeah.
Yeah,
So great.
no one said EV financing on the panel.
He did.
I think a lot
he
of
was
people
close.
have already
Lot
made
of
bets in
people
their
have already
space. A
made.
lot of money has already
Only
been
reason what you're looking at now, not what
Just one thought, valuation going south in a lighter vein. The only glaring exception has been Bhavish Agarwal.
No, his stock, look at his stock price now.
All right. Questions from the audience. Yes. We'll accept 2 questions right now. Yeah.
So I heard, I think 4 of the 6 panelists talking about battery recycling. today you see there are very few indigenous companies that can get into recycling. And even if you want to start a plant as small as 1 megawatt capability output, so the investments for the setting of capital for the facility itself is north of 100 crores. Otherwise, we don't have any indigenous tech developed as of now. There are very few companies. There's Equido, and there are some companies that are Block9 is slowly getting into that also. But how are you looking at the capital allocation for these kind of early stages? When you say that you're interested, what sort of partnership level are you talking about? Because the only way right now is partnering with global companies and get that tech to India and try to do that. But still, the cost of initial capital expenditure is very high. How are you looking at it?
So I'll take that. See, currently as a fund, where we are right, this chunk is to find the right technology in the space, right? And all this funding can really follow and some of these pilots. So we are yet to really find any company who's able to think beyond black mass. So everyone is really getting stuck around black mass, but is there someone who's really doing very, very innovatively in terms of getting extracting the underlying metals out, and that can really come back into the ecosystem. So as we all know, India doesn't really have these reserves of lithium and cobalt. The only way to really tackle this is someone who can really make a technology that can really then extract these metals from the batteries, and then those can be put back into the ecosystem.
The question is, will any one of these panelists believe that technology? When Karan talked about innovation.
No, of course, I think that's really what VC is all about, and every fund is a little differently structured. And I must admit, we really didn't put a pen on any of the cell chemistries. But fundamentally, what we think at the fund is we will have to really take a bet on a technology player who's trying to do something differently, seed that company, look at some of the initial pilots, and then really scale it up going forward.
I'll just add one sort of anecdote to what Nitien just said, which is that you're very right. That it's extremely insightful to say that our VC is really willing to take a bet on new patented technologies, right? Absolutely.
Not even patented.
Absolutely. Emerging technology innovation in terms of recovery. In fact, just last month we've been having sort of rounds of discussion with this very interesting company which started off in an academic institution with new technology, and they couldn't find anyone in India to take a bet on them to even run a pilot. So they've actually gone to Africa and South America and done their pilots there, and they actually now have proof of concepts on the ground. So absolutely true. I think over the last couple of years, it's fair to say that we in the VC world have started behaving less like venture capital and more like private equity, because we've all seen some some bad experiences, let's say, from a valuation standpoint. But hopefully that trend is starting to change. But yeah, the courage to kind of bet on a new technology is something that we as an industry probably need to come back to. But also recognizing the role of capital. VC venture capital is fundamentally catalytic capital. It's not meant to be, it's not meant to be large capex. It's meant to be transformative capital at the right stage in a business. So as long as we stick to that, I think we can play the right kind of role in the industry.
Great. Any other thoughts on the panel?
We have so many questions.
Okay. Any other question from the group? Yeah. Manish.
All of you actually made very quite interesting points, and especially on the evaluation, especially on the role of your capital as catalyst to a lot of startup companies, especially in pre-seed, seed, pre-seed A stages. To answer your or effectively provide a different perspective, that how flexible this term sheet discussion can happen. What sort of flexibility we can build around which can address both the sides, where the capital can be deployed fast. If upside happens and everyone wins. But at least the founders who are actually making the money grow, they actually access the capital fast, and also protects the interest of your LPs or the VCs that okay, I'm making the right bet. So what sort of flexibility we can actually expect from this panel, or as advice to other larger VC ecosystem, that innovative ways of structuring the deal, structuring a term sheet which is more beneficial?
Can I answer that?
Sure.
So mostly our term sheets are pretty fair, so very limited flexibility.
That's it. Drop the mic.
Yeah.
Post you.
So maybe, so I'll tell you, so you should understand what maybe my opinion from investor's perspective. Right? So if in early stage investor is coming and all, so he's putting money in 10 startups and he knows that out of 10, 8 may fail and only 1 or 2 will go high. So that's where valuations, if you're going for valuation, he has to get that recovery recovery from one startup of all those 10 startups and all, sometime. So that's why you have to see valuation sometime. So we also talked, there were pre-revenue startups coming for a 50 crore valuation. So that's why sometimes innovation is good, but sometimes 50 crore, 100 crore valuations without implementing those things and all is sometimes investor is seeing 10 other opportunities also. We would love to see, okay, this is 50 crore valuation with pre-revenue, that's another startup with a 1 crore maybe a return of and having a 10 CR valuation. He would like to put money in that. So that's why sometimes term sheets and valuations play a role, you know, as any deal. So as an investor or any deal. So what is a deal? जब 100 रुपए की चीज 80 में मिल रही है, simple. है ना, 100 की चीज अब यहाँ पे, so if there are 10 people coming and selling me this water bottle और सब 20 rupees की बेच रहे हैं, तो शायद मैं कहूँगा अच्छा देखते क्या. लेकिन if somebody comes in says कि ठीक है यही same water है, यही सब चीजें हैं, maybe I'll sell it for 15. Then the person may think, investor may think, okay, I'll buy that at a reasonable price. So that's why I think as a term sheet, you're talking about those valuations and all plays a very important role. So valuation, that's why I want to earlier also note that how valuation works and all, but maybe that I'll discuss in detail later.
I'll just quickly add to this.
Yeah.
So, since I mentioned I'm a lawyer, so I have seen so many term sheets and I've dealt on the term sheets only with the founders at initial stages, right? Usually, if you see, term sheets are generally standardized. And there has to be a reason around it because we as investors ask for very basic rights, right? And as far as valuations is concerned, valuations are decided before the term sheets are signed. We all know that. It's just put in the term sheet and signed. So valuation is something which you have to convince why your product is worth 10 crores and not 8 crores or 7 crores. And deal structuring always happens. But if you say that, you know, you are at a seed stage or pre-series A kind of stage and you say make a blended kind of deal, so that comfort doesn't come because we don't want you as founders or the maybe angel investors to take exit at such a level because at that point in time company needs money. So term sheet negotiations happen. It's not that it never happens. Valuations are decided before the term sheet because we give LOI and we decide the valuations there. But a good founder is the one who can sell his company at the price he wants. So if you are convincing enough to sell your company to us at a price you want, then we have given valuations of 100 crores also. We all must have 200 also, 300 also. We see many VCs putting at higher valuations also, but there has to be basis. That's my take.
So thank you. I think probably I'll pick up the question from Manish. I think his question specifically was, of course, valuation is a very relevant point, but where he's getting to is that EV ecosystem does require good money, right? It is not only a software only play, right? And when capex heavy business ideas are put in front of a great panel like you, mostly when it comes to deal structuring or term sheet, the time to close the deal is very high. So how can we make sure that the capital is structured, the deal is structured in a way that the deal life cycle is also shortened and some of the playbooks which are slightly capex heavy also get funded by you?
I think it's already 45 to 60 days at max.
Mm-hmm.
Most of the founders are getting money in bank within 60 days and so since I know the entire life cycle.
Guys, how many of you agree with Neha here? Somebody has picked up funding?
Not at all.
The only reason has to be due diligence. And the bigger mistake what I have seen is founders are not ready with their due diligence papers and their teams take a lot of time to give us the paperwork to do the due diligence online. You being in IB, you know this problem and this pains a lot.
Yeah.
A lot. And that's where, in the entire process, 1 month specifically goes to due diligence.
Yeah. I think Manish wants to build on his question. Yeah.
I'll allow Manish to follow up his question, but I'll actually say, look, there is no magic bullet to get funding, right? Nobody will tell you that. But I'll flip it a little bit and actually say what are some of the red flags that actually either delay or make deals not happen from our perspective. We've talked about one already, which is that if you sense that the deal is mostly about buying out either the promoter's stake or some part of the promoter's stake or exiting previous round founders, and most of the money is not going into the business, that's a huge red flag, right? So that deal, you should know as a founder that that's not a VC ready deal. Secondly, I would actually say that if, like Neha said, a lot of it is that, look, fundraising takes money, it takes time, takes effort, and time is money for founders. But be prepared for this process that while you're going through fundraising, it is going to take up a significant amount of your time and energy, so have a backup plan. If you are the kind of funder, unfortunately, if you are a founder, then there are 300 things that you have to do. But you have to have a team in place to handle the day-to-day of the business while you're raising money. There's no way around it because it is going to take energy. Even if you get it done within 45 days, it's going to take up 24 hours of your time during that 45-day period. Be prepared for that. If you're not prepared for that, you're not ready for funding. It won't happen. And lastly, the other sort of huge red flag that I see increasingly is not just due diligence, a lack of transparency. Look, you're looking at getting into a relationship with a funder, which is a minimum of 5 years, right? Unless you're looking for bridge funding or whatever. Think of it as a longer term relationship and come in with that level of transparency and trust. Because without that transparency and trust on the founder's side, you're not going to get it from the VC's side. And I don't know what has happened over the last couple of years, but from the founder's side, I've definitely seen a lack of transparency and trust as a trend, which I think is unfortunate. Whatever it is that we can do from our side, also obviously it's a reciprocal process. But if you try to not disclose things upfront, this definitely causes the deal timeline to extend. Is something that I would want to say.
No, really good points. I think Vineet wants to add something.
Yeah,
Yes.
just one way I think what I can think of to Manish's point, structuring a deal could be that maybe make it a milestone-based,
Payout.
funding disbursement or payout, right? Wherein whatever you need, so say you need 10 crore rupees for a year and a half or 2 years, right? Can we break it down into multiple milestones where you sort of come to a number to sort of a point or a stage where you're ready to take the next tranche? Is how maybe this can be structured, and it does happen very frequently. It does happen in a lot of deals, and then I think to what Divya said, one of the things that I totally believe in is that there is enough capital out there. There is a lot of capital out there waiting for the right founders to take it.
Yeah.
Unfortunately, the demand and supply thing is a little skewed right now, right? Where the demand side, from the founder side, I think we are waiting for good founders to approach us. There is no dearth of capital, believe me. Each one on the panel here has the capability to invest money in your ventures. All we need is, the right set of founders to come to us.
Well, that's great. Manish, we'll have to excuse your question because of the time. I think I've been told that very limited time is left. So quickly, I think one interesting point I think Neha also mentioned and we were discussing during the coffee break as well is that this sector requires patient capital. Now, Divya mentioned an interesting statistic that at least it's a 5-year relationship already. So what is the definition of patient capital and what can apply to the Indian ecosystem right now? Any of you would have any thoughts which I
Start with Neha only.
Yeah, Divya, please.
Neha or Divya?
I sort of give you one rule of thumb, right? If you're looking at, so patient capital, 5 years is not long in terms of a capex intensive industry, but look, my fund is a 10-year fund. So, and you have to look at the investors' horizon because we have to return money to our LPs. So there's going to be an exit timeline in our heads when we invest. So when you're looking for funding, if you know clearly that your capex need is going to be 100 crores for 20 years, VC funding is not what you should be looking at in the first place, other than as a sort of a bridge kind of funding. So patient capital seems to have multiple definitions. One definition of patient seems to be that you don't expect a return at all, which is not about to happen in the VC world. Let's be honest. But patient capital also means that look at the horizon of the fund. If it's a 6-year fund and you're approaching them for patient capital, that's not about to happen, right? Look at a 10-year, 12-year fund. Look at a second or third fund. Don't look at a first fund because first funds typically have shorter horizons. I don't have an answer. All I'm saying is don't expect patient capital from someone who's not fundamentally structured to be patient. That's obviously a mismatch.
I'll just add to what Neha said, and we have to be a little bit empathetic to the founders also. So Neha, it's really our duty when people are really approaching us, and we have to really look at what our timelines for exits to our LPs and commitments are, and accordingly really pick up our bets.
That's the
Sorry. So we have to really accordingly pick up our bets. That way.
I agree.
Also, please understand in India and the way we look at it, no business gets built in 5 years. This is really not the West where people will really go for an IPO in 5 years. So while you are raising capital, you have to be cognizant of the fact that what commitments you are making to your LPs. And I've seen a trend when like traditional people used to really have a 9+1+1 kind of fund lives, but everyone has started looking at more longish funds right now, and you will see this happening more and more. Because in India, I think that number of challenges that one has to face. The founders have to really build everything from scratch. They have to really keep on fighting a new battle every day. It takes much longer for companies to take a stage where they can give exits to the early stage investors. So I think the onus is really on the investors also to really structure their funds in a way that you can really stay there in the company, support your founders for a long time, and then really ask for the exits at the right time.
Great, thanks. Just one final.
I think, maybe just to add one line to it. So there's a capex and opex you were talking about. So I think if there is a huge capex and somebody has to try and test it, and even government funds are there are debt funds also. So for capex, generally where it's not for research, not for marketing, not for other expenses, but purely for machinery and all systems, I think debt funds is the best option to go for. Because the investor knows that if in any case this doesn't work, maybe they'll get the 50%, 60% return by selling the machinery, or they can sell it and all. So in those cases, generally what I've seen is debt funds are the best option to go for if you're a capex high model.
Okay, great. I think just to round up the discussion now, I will just go again the rapid fire mode. So 3 things that you look for in an EV startup. And you are not supposed to answer in terms of sectors.
Okay, 3 things that I look for. Generally, in a startup, I'd say that, irrespective which sector it is coming from, is there a big enough TAM that you're addressing, right? The total available market, is it big enough that you're going after? Secondly, probably should have been the first one. Integrity of the founders, I think, goes without saying, and we tend to be a little judgmental on that front, right? But you get to know. You get some soft signals in the first place. Are you there with the right intent? Are you there for the long run or not? And will you be the one to sort of escape when the tough situation arrives? Somehow you get to know that, right? Third thing, in my opinion, is your use of capital that you're raising, right? If you can justify that, I think this will be the third priority on my list.
So I'll probably put a few more out there, but technology, founder, then unit economics, TAM, market, etc., obviously, and proof of concept.
I already have. So again, founder, because we invest at early stages, founder for sure, founder and his integrity. Second is real numbers. Is he talking about some numbers which actually can change into reality? And third is why he's building what he's building.
Purpose.
Yeah.
So powerful.
Yeah, I think those are all excellent points and I agree with them. I'll probably just sort of add to what's been said. We do look for uniqueness of technology and business model as a differentiator. And secondly, to just add, when we talk about things like early traction, we also look at dimensions like why will customers prefer to pay you money for your product or service versus somebody else's product or service. And we'd like to see that proof with some of your early clients and see what that traction actually translates to. So it's not just the numbers. So,
Great, wonderful. Nitien.
Of course, founders' integrity is paramount. the kind of businesses that we are looking at are B2B use case businesses. When it comes to OEMs, we want energy to be a part of the entire OEM equation.
Okay. So I say idea, but idea isn't whether that idea is scalable or not. So scalability is the point, and then founder, but founder in two terms, that whether he can execute that. So execution is the point, and whether he'll be able to that execute whatever he's saying is in an idea, and whether that product whatever he's building is again is it for masses or whether they have a customers and all. And then I would say again from founder part communication skills, because I've seen many good ideas, but sometimes are not able to explain what they're doing. So a good communication skill, because it's not just me. You have to go out and talk to hundreds of people every day. You have to talk to startups, investors, clients and all. So good communication, if they are not able to explain their idea to me, so it gets very difficult to explain to their customers as well.
But great, I'm sure we have a lot of questions. We have the right amount of breaks in terms of lunch, in terms of networking breaks. Thank you so much to the panel here. And thank you so much for asking some questions. And I'm very sure that as the culmination of this event, we'll have some good discussions and good deals that come out. Thank you so much.